Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 320 and today is 12th of December and we're going to see contrasting stories of two PSU banks. So we've selected two PSU banks and we will see their very different life stories of these stocks, how they have performed over the last many decades and how the things are changing for both of them. As I've been saying every day in every daily bite, PSU banking is the leading segment right now. It's a complete re-rating of that sector or segment, if I should say. And you can see in this chart that for FY 22-23, PSU banks are up 60%. In the last 12 months, they're up 56%. In the last 3 months, they're up 37%. In the last month, they're up 16%. Last week was 5% and today was 1.4% more. Public sector enterprises also up 0.8%. So it does seem like to me that there is going to be some major budget announcement on this. That is just my speculation. I think given that this run up is happening and budget is around the corner, I think there is some I mean there's no smoke without fire sort of a situation happening here. Real estate also up 0.5%. Metals and commodities looking up with China opening up news again. And IT stocks were the only IT and pharma and some consumption stocks were the only ones which lost a bit of ground in today's market. IT for the 12-month period or for the financial year is down nearly 20%. So that is the most beaten down sector. So contrarian investors who like to invest in beaten down sectors can look at IT, but momentum investors, of course, will not touch IT for a long time. Broader indices, Nifty 50, 0% change, Nifty Next 50, 0.02%, CNX 200, 0.06%, 500, 0.1%. So, no, the market not moving an inch net from the previous closing. However, mid and small cap index and small cap 250 gaining 0.38 and 0.53%. So the broader market beyond the top 250 has moved positively, whereas the top 250 stocks are stuck in the limbo. MI25 was the top gainer at 1.4% up in the weekend investing strategies. MI35 up 1.37%, MI20 up 0.83%, MI30, MI50 all doing all right. So overall, a reasonably good day for most of the weekend investing strategies. Heatmap for the day. BPCL doing extremely well at plus 3%, Coal India up 1.5%, ONGC up 1%. So this energy corner has done very well today. Infosys was down 1.4%. That was the uh, IT stocks, and actually it was only Infosys. Wipro was in green, HCL Tech was in green, Tech Mahindra was mildly down, and TCS was also mildly down. So it was largely to do with Infosys. In the consumption stories, you had uh, Asian Paints down almost 2%. Bharti Airtel also down 0.8%. Sun Pharma, Power Grid, Adani Ports, Titan, Bajaj Auto, Eicher Motors all down along with Cipla. SBI Life, HDFC Life also down. So you had Nestle, ITC, Britannia, and levers a bit on the green side, but largely I think the week, because it is so heavy in terms of news to come from the Fed and other central banks, that people are just waiting and watching what happens this week. And I read somewhere that some $3 trillion worth of options are going to expire this week. Uh, I hope I'm not wrong on that number, but that sounded a huge number to me. So this week is going to be crucial, and also the holiday season starts after this, so volumes will taper off in the next 4 or 5 days, and possibly volumes will collapse the next week going forward. So a lot of things to look forward to in this current week. Top gainers Fertilizer and chemicals up 12%, Suzlon Energy up 10%, Jindal Stainless up 10%, IRFC up 7.5%, and Kalyan Jewelers up 7.5%. So gold is doing very well, and I'll show you a chart on that. So Pharma advanced down 6% on the losing side. Naveen Fluorine, Godrej Industries, Mahindra Holidays, and Metropolis all down between 3 to 4%. Bhao Bhagwan Che, the BBC principal, is back here again, and this chart is that of Laurus Labs. This Laurus Labs reported, uh, poor numbers, and you can see that it made a very nice, in fact, head and shoulders pattern way back in October 2022, somewhere near 590 rupees, and that, of course, now we have a hindsight advantage, but this kind of formation is rare, that it is so clear that the stock went up from 240 to 720, made a distribution here, created a head and shoulders pattern, broke the neckline, came down, went back and retested the neckline, and dropped again here. Then it went into a flagging pattern, and then it broke down below 445. So must always take cognizance of such important levels and corroborate with your strategy idea in case you are doing fundamental analysis, etc. That is something going wrong, because the technicals are telling so, and usually, the bhav is ahead of uh, everything else. So, and today I think this stock has gone below or near 400. So this is something to learn from in terms of how to add more intelligence to your decision making. So I was talking about Kalyan Jewelers doing very well, and gold overall is doing quite well. This is a chart of MCX continuous futures on the INR gold, and you can see that from 2017-18, where the base was formed after the fall from 2013 highs, the gold was around 28,000. So from 28,000, it went up very nicely in an exponential fashion in the next 3 years to almost 56,000. And then there was this correction to 44,000. So about less than a third of the retracement happened here. So all good. Then it broke out of this double top here near 49,000, went to 54,000 again, was correcting for the most part of 2022, and since August it has started to rise again, and it has now broken this technical pattern. If this pattern holds, you would see somewhere close to, I think the height of this channel here is about 10,000 or more, and we've broken out at near 53,000. This points to about 63,000 odd, this target of this pattern. And if I see this flag from the bottom, uh, it is a bit more uh, than 10,000. So as long as we are able to break out of this peak and this peak, I think we are headed towards very, very strong gold prices. But of course, if it breaks down below this channel again, then all those bets are off for now. So again, I keep telling a lot of people about gold, because I think that this knowledge or information is not available at most other forums. A lot of advisors, managers have been, in fact, wanting, not wanting, but recommending people to be totally invested in equity, or at least bashing gold, because the Buffett style of investing bashes gold. Uh, but the proof is in the pudding, right? I mean, if you see last 20, 30, 40, 50 years of data, INR gold gives you 11.6% CAGR over a longer period. That is the data. which is very, very close to what you're getting in the index also actually. So if a instrument which gives you 11, 12%, and if you're riding SGBs, then you're getting 2.5% more on interest also. So if you have an instrument which is giving you 10, 11, 12%, and which is also a natural hedge to the currency in your country, and which is a natural hedge to unstable governments, and it's a natural hedge to equity, why will you not want it? I fail to understand that. So have a good allocation to gold in your portfolio is my sense, but of course you must try to educate your financial advisor that he must advise you on gold. Uh, so so let's now come to the PSU banks that we want to talk about. So PNB is the first bank, and PNB has now reached near 58 rupees. It was at the same level 20 years back. So 2003, 2004, it was near 30, 40 rupees. And very recently, we were at 25 also. So anybody who would have bought any time during this period of 2005, 6, 7, 8, 9, 10, 11 would have been sitting on huge losses, or would have had some acidity happening because of these losses and not knowing what to do with it. So buy and hold did not get you anything in this scenario. So if you bought a huge chunk or even 5%, 10%, whatever, anytime during the last decade, you would have been sitting in huge losses. And possibly, once it did collapse after the few fiascos it had of the NPAs, maybe most people sold out at 25, 30 rupees, never to look back at this bank again. But just see, if you were to play this tactically, if you were playing, let's say, momentum or any other strategy tactically, then these three very large swings. 2009, it went from 50 rupees to 250. So five times, 5x is the move that you got here. Then in 2013, it went from 75 to 220. Three times it went here. And then in 2016-17 again it went down from around 70 to 220, so three times again here. So in all these three swings, even if you manage to get 40-50% of these moves, you would be much better off than buy and hold investors, number one. Number two, you will not be sitting on huge losses, which will demoralize your investing process itself. And number three, the money that you would have gotten out of the system, let's say you bought somewhere in 2009 here, and then maybe you got out here, you would not be, sitting with that capital in PNB anymore. You would be using that capital elsewhere. And even if you are generating index returns till this next opportunity comes, you can see the compounding how it happens. And now, of course, in 2023, all PSU banks are running, and so is PNB. So we don't know where this is going. Maybe this is going to 75, maybe this is going to 100, maybe it's going to 120, maybe it is just going to drop from here itself. We don't know. But you are doing tactical allocation of your capital to stocks that are moving, and not to stocks that will bleed you for decades altogether. So this is, some sort of learning that we should derive, that you must plan a strategy and not a marriage with any of these stocks. The other stock is Bank of Baroda. You can see that very recently in COVID crash, we were at 40 rupees in Bank of Baroda. And we were at the same price in 2003-4 also. So even Bank of Baroda, which is a much superior bank, they say, was sitting at almost near 16, 18 years of zero performance from uh, 2003-4. And if you had bought anything between 2010 and 2018, you would be sitting on a 80% loss when you were here. And most people cannot sustain those kind of losses. And usually these ferocious downsides come when everybody that sells off. Only the ones who forget about, oh, I had some Bank of Baroda in my Demat account, only they will be left to see this kind of run. Most people will just not do anything while it is falling, and once it has crashed and there's media hype about how stock has gone down by 80-90%, then people will go and sell it off. That's the usual story that happens. So now here again you can see that from 2009 to 2011 there was a huge run from 440 rupees to 200 rupees. So 5x type of run. If you had gotten something here, then you had 90 to 220 again, about 2.5 times here, and then we would have avoided this 6 7 years of no returns on your portfolio by utilizing your capital somewhere else, and then maybe somewhere around 80 90 rupees your momentum strategy would have caught it again, like it has done in several of our portfolios. And we don't know where this is going. We let the winners run on this. So this is how tactical allocation, and I've shown you two examples. One which was a really bad bank to some extent, and one which was a reasonably more distinguished bank. But in both cases, you saw how the opportunity cost of capital really could make a lot of difference. And BOB, like in, for instance, the example is that in NNF10, one of the strategies which runs on Nifty Next 50, BOB is, I think, almost, yeah, it's near 82% up. So it would have entered somewhere near 100 rupees, and it is joining the ranks of other stocks that have done more than 100%. So just purely based on price trends, without worrying about narratives, without worrying about what government's going to do with PSU banks, that the trend has started. The momentum is there. Why not make use of it? Um, so this is something that I would request all of you to look into your strategies if you don't have one. If you are having a very nice strategy of exits, stock selection, and you know uh, how to pick stocks, how much to allocate, then this is fine. But if you are just doing ad hoc buying and selling, then usually, a lot of people, 80% people will buy at tops and sell at bottoms. The Pareto's principle applies very well to the stock market. So uh, I don't even think 20% people are making money. But even if 20% are making money, you would want to be in those 20%. So this is something that I wanted to update you about on these insights. Uh, Thank you so much for watching this daily bite. Please do keep sharing it with your loved ones and with your friends, and do send us your comments and feedback as always. Thanks. Bye. And also one thing, not the least, I wanted to thank all the MI20 new users who have come into the weekend investing fold. So thank you so much for your trust and for your optimism towards the markets and for weekend investing. And we hope that you will have a great journey along with us. Thank you. Bye.